Hey guys, Mubarak here of Penny Stock. Hope you're doing well. Today again, I have the master over at Penny Noise. Great analyst, and his name's Dan. Dan, why don't you let our audience know? I think you've introduced yourself before, but now that I think we've gone through a couple of different reports and stuff, why don't you tell them a little bit more about yourself and what you guys do when you kind of put these reports together? What are the key points that you guys look for, and let's talk about it. Groupon.
Yeah. Add a lot of value to
Oh,
listeners at home. So I'm Dan. I'm one of the many analysts at Penny Noise, and pretty much, if you want to go into the mindset of what we do, I personally look at a lot of screeners. I utilize Yahoo Finance a lot. You add a couple filters, or something over 3 million in volume and such like that. Ideally, they have EPS over zero, greater than zero.
Okay.
That means that they're operating well and they're turning in some bottom line and they have good top line revenue. So really what comes down to it, I utilize the screeners a lot, and I'm always on my toes. I always look out for the news. I have a big watch list of penny stocks.
Important.
And, you check the week before to see whose earnings are coming up, and that's what we're going to provide for you guys at home. We're going to do the majority of the labor here. We're going to try to make it as easy as we can to just generate ideas for you guys back at home. And I'm really looking forward to a long future added value with you guys.
Awesome. I love it. Yeah, and I have actually the Groupon report pulled up from the 28th. I know we're looking at it now a few weeks after, but would love if you could run me through a little bit more about, you said Kramer mentioned it. Run me through a little bit more about the background of it and where it stands now.
Yeah. So on the 28th, I believe it was a Friday, Kramer mentioned Groupon on his lightning round.
Mm-hmm.
And, Kramer, he's very stagnant. He says, they have a good solid balance sheet. But what really does that help me at home?
Yeah, exactly.
What the heck does that mean? So that's what I love to do. I hear something like that. Not only outside the screeners, outside the earnings, I look at what's going on, like what these guys are saying. Like, I sympathize with people who don't know what he means by what does he mean by having a good balance sheet.
Yeah.
So that's where I started with this. It is a week old, and if you are a day trader or a long-term investor, I think at the end of the day, fundamentals really don't change over a short period of time.
Definitely.
So whatever I wrote in here hasn't really expired, other than the price, which is good. This is what we.
Absolutely.
So what he says by a good balance sheet, he's pretty much just saying that they're maintaining a free cash flow, and that is where the price of the stock is derived from. But they do have a lot of debt. So it even confuses me when he says they have a good balance sheet, because honestly, Groupon is in heavy debt. Their debt to equity ratio is 85%.
Yeah.
And that's high. That usually over 40% is something that is a red flag.
And what does that mean? Kind of not necessarily the equation, but on a conceptual basis, what is that referring to? A high.
So that's a great question, Mark. So debt to equity, it's great to it in the capital structure. So pretty much what a company is built off of is equity, which is what we pay in. Mm-hmm. We give our money to own a share of equity in the stock. But then debt is when they go to the debt markets, they can incur debt to raise capital that way.
Like loans and stuff.
Yes, exactly. Okay. Yeah, so they take out millions and millions of loans.
Mm-hmm.
And there's a whole other side of Wall Street where people just love buying bonds.
Yeah.
So, but you don't want too much of it. But the good thing about that, to a certain point, is that it actually increases leverage and it gives you a tax benefit. It lowers your taxable income. So a lot of people do it. It's a cheaper. So an interest rate on equity is actually, the cost of equity for Groupon is, I think, around like 14%. So imagine getting a loan for 14% compared to a 7% loan.
Yeah.
So that's pretty much what it comes down to. These guys have a lot of more debt than equity, which therefore means they have lower taxable income, but they're also tying up their cash.
Yeah.
And that's not good when they want to grow and develop their business further.
Okay. Got it.
Yeah.
That makes sense.
I mean, it's not the healthiest balance sheet. I don't know what Kramer was mentioning, really, but they do have break even like current ratio, which shows that their current liabilities, which is like the short-term debt that they owe to like customers, or they have enough current assets, cash, to pay it off. So EV sales, I've mentioned that before. Again, it's the market cap plus debt minus cash on the asset side, and that's actually at a 0.60 times ratio, which is good. Anything under 1 usually is relatively cheap, we would say.
So anything under 1 is good usually for the EV sales.
Yeah, usually. I mean, it's not really, usually you have to be skeptical, but if it's over like 2 times, then you have to step back and say, okay, really the sales, the common denominator sales is clearly a smaller number than their EV, which is what their market cap brings them at. So, like, if their EV is bigger than what they're bringing in sales, that's a kind of a good sign. It means they might be undervalued.
Okay. For that means for the trader, for the investor, that's a good sign, because that means anything under 1 means that potentially the market is not valuing the stock at the right price, and so
and if you think of it logistically, just think of 1 over 1, that equals 1, right?
Yeah.
So having the numerator being less than what they're actually bringing in sales comes to the 0.6. So that kind of shows me that their market cap.
So you're saying that they're doing more than 1.65 billion in sales?
What's that? Sorry.
They're doing more than 1.65 billion in sales right now?
Yeah.
Okay.
Awesome. Yeah, it seems. Well, it also could be their debt. The debt probably enhances that numerator, though. So, what did they do in revenue?
Let's see. I'm gonna pull up the financials here.
Revenue. Yeah. So they did. They did 2.7 billion actually. So
wow.
they are worth less than what they're pulling in.
Yeah, that's pretty incredible, because
That's you guys at home, like, really, that's one, especially with these companies that aren't putting in earnings. Like I said, at the bottom line, after they pay everyone, pay all their app developers and all that, that's what earnings is. But sales is what we pay them, like top line. So regarding growth, another thing that I look into is growth. Top line is kind of flattish, the 2% growth, but earnings, however, are estimated to be 7 cents next year. They actually had a trailing 12 months in the TTM next to the report, EPS. That means trailing 12 months was negative 10 cents, but they're expected in the next year to be 7 cents per share, which is great. 63% growth.
Wow.
That's impressive. That's a lot of growth. That means they're cutting back on expenses. In the past 3 years, they've had a return on equity, as you can see in that second bullet point on the report. That means for every dollar that I put in the past 3 years, I've gotten back 30 cents of it. So that's pretty good. You don't really see that. And the average for the online retailer is about 13 cents on every dollar.
Got it.
Yeah. So free cash flow, that's another thing to look for. That's clearly that's a huge thing in the fundamental side. They're relatively valued at what they're trading, I think, on a discounted cash flow basis, trading around their intrinsic value. However, and I know you're going to go into this more in depth with the technical side, and they kind of had so I look at the relative strength index, and this could be
let me
more advanced.
Pull that up so people can see.
Something to look into. So on the 28th, they actually had an RSI of 59, signaling that the market was kind of bullish that day.
Yeah.
So the RSI is pretty much just a momentum indicator that measures the magnitude of like price change.
Okay.
So anything under 20 is really oversold. Like 25 is like this stock has been hammered today, which could be a good sign to buy, honestly.
Okay.
So RSI is something I look into, but I'll let you expand further into the technical analysis and look at the charts.
Yeah, definitely. I mean, I like how that's brought into the report as well, and wanted to cover that going into more specific, detailed technical analysis charts. But what I always do is I always start off, with Groupon, any stock is looking as far out as possible, and identifying the lines of support and resistance, so I can start getting, and my students can start getting a good understanding of the good general range that the stock trades in. So as we start understanding more of the chart, we can see, okay, where is the point of supports and resistance? Because a lot of the times what actually happens from a technical basis is, if you guys look at this chart right now here, this point right here, this 4.18, this is such a great line of support, because you see every time, almost 4 times in just the past 6 months, every time it would go to 4.18, it would bounce back up. And what happens though, a lot of the times, or around 4.2, what happens a lot of the time is the same level of support, if it ends up being cracked, like it did recently, finally, in early September, that ends up being the future line of resistance. So what that means now is that there would be a catalyst move, or we would be very interested and see a lot of volume happen if the stock broke 4.2 again, because that means that there's a new renewed faith, confidence in the stock. And again, I'm purely talking about from a technical standpoint, the whole group of traders that purely trade off of analyzing charts and graphs. That's kind of something that they would look at. And so what we see here, as we dive a little bit even deeper in, is that Groupon's pretty much at a low overall. What do you think is going to happen now, Dan, with the overall price? With the buy rating, what do you think we're looking at now?
Yeah, so I know in my report I initiated it as a buy, just simply off the fact that the growth is tremendous. It looks like they're looking to be extremely efficient within the short term, which could be a year or two. On an intrinsic value basis, their cash flow it's about trading at where it should be.
Yeah.
But like the company business model is really cool. They're connecting local businesses to consumers.
Okay.
Giving coupons to I don't know, Joe's Pizza Shop, and that helps the small businesses, but also helps Groupon. They get a percent of the Joe's Pizza actually pays them for the ad revenues and stuff. So I really think their mission is really cool. I've used them once or twice. I went snowmobiling once through Groupon and saved like $20.
Yeah. Oh, it's a great product. I use it all the time.
Yeah. So I'm sure the people back at home have heard of Groupon. And it's a really interesting company, and they do have they have a solid fundamental basis. They have free cash flow, which is really rare in the penny stock world, to be honest. They're at an EV to sales. They're at 0.6. It's kind of hard not to
be bullish on
find
it.
These guys attractive. They're also very high volume too, so pretty liquid stock.
Nice. Awesome. Well, there you guys have it. I mean, that was a very in-depth analysis. Appreciate you coming on, Dan, talking about
I
it. And
appreciate you having me. Thank you, Mark.
yeah, absolutely. You know, I love these reports. I love kind of being able to go into this and showcase it with the technical analysis. As always, guys, I hope you guys enjoyed this video. Comment below if you guys own Groupon, have traded it, what you feel about it, if you've been burnt by it. But also, we are always looking for more ideas on what types of videos to make and what tickers to cover. So whether it's an educational video that you're looking for, you know, we've been starting to drop some lessons in, you know, we talked about the importance of free cash flow here, and very good to be able to rewatch these videos and start enhancing your vocabulary and knowledge of the important stats and metrics that you should know to be a successful trader. So we're going to keep doing this. We want to hear from you guys. And again, if you want to be part of, you know, our 5 under 5 and get these reports sent to your inbox directly on a daily and weekly basis, as well as updated, you know, behind the scenes VIP videos on, you know, educational stock trading and also more advanced strategic methods of how we profit as day traders, definitely looking forward to having you guys sign up. There's a link in the description below that you can click on to get more access. But other than that, hope to hear from you guys soon, and see you guys in the next video. Take care.